All right, so in this video, we're going to be taking a look at some companies that are involved with the Internet of Things. We're going to be doing a value investing type stock analysis where we're looking to see what the current valuation is for these companies, and does that valuation warrant us to take action on a buy for these companies. We're going to be looking at this with the perspective of holding these companies for at least a year. All these companies are going to be involved with the Internet of Things, which is a very promising part of the industry right now. Basically, Internet of Things involves interconnected devices and machinery that's communicating with itself and giving data output that can help with predictive analytics. It can help you understand how efficiently your systems are running. So there is a cloud computing component to this, and then there's also sort of the sensing and the actual application into the real world. So this is going to be part one of a two-part series. This video is going to cover 4 different companies. We're going to talk about Cisco, we're going to talk about Emerson, Honeywell, and also Intel. So out of all the 9 Internet of Things companies that we're going to look at, these 4 are probably the more conservative picks. They've been established companies for quite some time, so they have a long history of earnings that we can look at, and we're going to take a look at their valuations. So let's start with Cisco. Looking at Cisco, you can see that Cisco's maintained a pretty high multiple over its entire lifetime, about 19.32, and it's actually sitting at 13.26 right now. That can be a little misleading, right? Because as companies grow, their prospects for additional growth get smaller, right? So larger companies, it's harder for them to continue those sorts of rates of growth. So let's take a look at the last 5 years and see how Cisco has been trading. And we can see still that it is looking a little bit undervalued at this time. It's trading at a 13.26 multiple. Historically, it's traded upwards of 16.27 on the 5-year time frame. If we look at a 10-year time frame, 13.76. So a little bit more in line with what we're seeing today. But on several of these more recent time frames, we're showing that Cisco might be a little undervalued at this time. And they also have a decent dividend of 13.39% and decent earnings growth of 16.61. So Cisco is going to be a little bit more conservative play in the Internet of Things because they're involved with the sort of infrastructure that's needed to run it. As far as the communications, that's going to be a lot of Cisco involvement. So for each one of these stocks, we'll take the 5-year time frame and we'll take a look at the aggregate score, which factors in the dividend yield, the adjusted earnings growth rate, as well as the valuation yield from where the stock is trading versus where it's traded historically based on its PE ratio. So for Cisco over the 5-year period with a 3.39% dividend yield and then 6.61 operating earnings, and we have an undervalue of about 22%. So that's going to give us an aggregate score of 32.7%, which is pretty good compared to some of the ones we're going to look at in this video. The next one on our list is Emerson Electric, and they're a technology and engineering company. They have products that are designed for the industrial space, commercial space, and consumer markets. If we're looking at Emerson, they have a little bit slower earnings growth. Let's look at the 5-year time frame here. So if we're looking at Emerson on the 5-year time frame, they've had some pretty nice growth as of recent, 7.61%. They have a decent dividend yield. Their dividend also has increased. They're considered one of those dividend kings because they've increased their dividend for a certain amount of years. Trading right now at a 20.84 multiple. Historically, over the 5-year time period, it traded for 21.35, so slightly undervalued according to the 5-year time frame. Let's take a look at the 10. So it's traded previously at about 17.96. So Emerson has been part of some of this new growth in the industrial Internet of Things space. So maybe some of that is leading to why it's been trading more recently at a higher multiple. So 5-year time frame, it might look a little undervalued, but still on the more recent time frames, maybe this 21 multiple is not justified. And that's where we can kind of use our own interpretation here to say, okay, is 21 truly the multiple that I should be valuing this company at? And I think that might be a little bit high. But if we stick with the 5-year time frame for comparison and we get our aggregate score, what we'll find is that we get a 7.61 earnings growth rate with the 2.87 dividend yield. And then for Emerson, we've got an undervalue of just 2.45%. So pretty much on point where it's traded historically in terms of PE. So that gives us an aggregate score for Emerson of just around 13%. So the next one on the list is Intel Corp, and similar to Cisco, they're kind of another one that's more like the infrastructure for the Internet of Things because of their production of semiconductors and a lot of their solutions that are geared specifically for this space. So Intel's been around for a long time. If we look at the 5-year time frame, it shows that Intel is maybe slightly undervalued from where it's traded before. On the 5-year time frame, that's just around a 12 PE. Let's see if we go back 10 years, what kind of PE it's traded. So 12, closer to 13 on the 10-year. And then 3-year also close to 12. So right now it's sitting at 10, which gives us a nice good bit of undervalue, at least according to these metrics. The earnings growth for the 5-year period is about 8.45, and that's slowed down as of recent, and that might be some of the reason that the more recent multiples are lower. But I think this looks pretty attractive. Intel's got a lot of different solutions. They're very diversified, solid earnings growth, and looking like you could argue that they're undervalued right now. So if we put all of their data together, we've got a dividend yield of 2.7%, earnings growth of 8.45%, a potential valuation yield of 18.89%, which is going to give us an aggregate score right around 30%. So looking kind of similar to Cisco. So the last one we're going to look at here is Honeywell International, and they've really had a fantastic run for about the last 10 years or so. And they are also, pretty diversified, but they have a lot of solutions in the Internet of Things space that are geared towards the residential and commercial sectors. So, smart thermostats and that are coordinating with the HVAC systems and that type of thing, smart controls. But if we look at them, they've got a little bit lower earnings growth rate than some of the other companies, and been slightly overvalued, I would say, in recent times. So historically, they've traded, in this 20 to 21 PE. We're at a 21.8 right now as I'm filming this. So this is August 2020. If we look at the 10-year time frame, they traded, back at a 17. So trading right now at a 21.8. I really like this company and would like to buy it, but it's still just a little bit overvalued for me. So another way to kind of use this data is I can look at the PE ratio here that it's traded historically. Let's go to the 5-year and look at that. So if I'm looking at 19.61, I can take that PE and I can calculate a price that I might be willing to pay for this stock. So if I take this and I say, okay, I want to buy this when it reaches this PE ratio of 19.61, that price is going to be 144.81. So we'll add Honeywell to our list here. We've got a dividend yield of 2.25%, an earnings yield of 3.84%. And this stock is actually a little bit overvalued right now, according to the 5-year time frame. So it gets a negative 10% on the valuation yield. And then that gives us our first negative score at just around negative 4%. So just looking at these 4 companies, both Cisco and Intel look pretty attractive right now. They don't seem to be overvalued, and they both have pretty solid earnings growth. I'm pretty picky when it comes to my long positions. So I'm going to go through a couple more stocks before I make any moves here. We're going to talk about some more IoT companies in some future videos, as well as oil and gas companies. And then I'll also make a video that kind of shares some of the changes I'm going to be making to my portfolio over the coming weeks. Thanks for watching. And if you like this content, be sure to subscribe to the channel and check out my other stock trading videos.